Good afternoon, everyone. Welcome to the WTO Trade Dialogues on Food. I'd like to apologize to our viewers for a slightly late start. In this particular episode, we have panelists with us who are connecting from all sides of the African continent, and getting the connections ready was not an easy task. I am Doa Abdelmoutal. I'm counselor in the WTO Agriculture and Commodities Division, and I am your moderator. In this webinar, I will be putting 2 rounds of questions to our panelists, after which I will be taking questions from you, the viewers. Please send us your questions to dialogues@wto.org. Our webinar today is entitled The Disruptors, a conversation with the technology giants revolutionizing African agriculture. Clearly, these are extraordinary times. A global pandemic has swept across the globe from east to west, from north to south. And if you've been reading the news this morning, it's nowhere near abating. The WTO trade dialogues on food were launched with a view to understanding the impact of this pandemic on our collective food security. Now, as we all know, there is a good side to every crisis. There are opportunities in every crisis that are to be found, and this crisis is no different. In fact, it has always been said, need is the mother of invention. With COVID-19, the world has taken an incredible leap into the digital era. It has prompted many businesses, consumers, and citizens more generally to reimagine the world post-COVID. The World Trade Organization is no exception. At the height of this pandemic, all staff were asked to work from home, and all staff were essentially asked to take that leap too into the digital era. But it is not just the staff and the work from home that took us to the digital era, but it is also the WTO rulebook itself that is evolving as we speak. As we speak, we have negotiations taking place in the WTO on electronic commerce. E-commerce, as we call it, and as some of our panelists and speakers today will be referring to it. And these are very exciting negotiations that are trying to keep the WTO rulebook in tune with the developments that are now happening in the real world, the real way in which people trade. Now, many don't associate digitalization with the African continent. But the African continent is digitalizing, and it's doing so in some pretty amazing ways. In fact, the businessmen in this webinar are introducing disruptions to African agriculture that are simply breathtaking. And they're not alone. There are many other disruptors out there, but we only had one webinar. In this webinar, we would like to put the spotlight on how we can reimagine the world post-COVID, reimagine the solutions to our agricultural systems, and reimagine the WTO rulebook itself. But while technology can provide answers, it also poses problems. Prime amongst them is that of access to technology. The internet haves and the internet have-nots, as they're often referred to. The International Telecommunications Union tells us that today, only 53% of the world population uses the internet. Now, while around 90% of people in the developed world use internet, only 50% of people in developing countries do so. Africa's use of the internet is still much below that of other continents. The International Telecommunications Union tells us that it is mostly men, urban residents, and young people who use the internet. So there is a gender gap, a demographic gap, a socioeconomic gap, and a generational divide in our use of information and telecommunications technology. Of course, there are many other challenges too associated with cyberspace, like privacy, security, safety, but access remains a gateway issue. Now, these problems are not insurmountable. And as you listen to the stories of our 4 disruptors today, I hope you'll be inspired to believe that disruption is possible and that it can be truly transformative. Commenting on the achievements of the 4 CEOs that we are hosting in this webinar are 2 experts from WTO who are part of the WTO COVID-19 response team, the task force created by the organization to monitor the impact of COVID-19 on world trade. So let me, without further ado, introduce our panel to you. Bolaji Akinborough is co-founder and CEO of Cellulant Corporation. Hello. Onyeke Akuma is founder and CEO of Farm Crowdy. Kikonde Mwatela is co-founder and chief operating officer of Twiga Foods. Kamal Yacoub is CEO of Troto Tractor. The WTO experts that are with us today are both senior officials from the WTO Economic Research and Statistics Division. Gabriel Marceau is a trade lawyer who will be speaking to you today about innovation in the WTO rulebook. Emmanuelle Gam is a trade analyst and an expert in new technologies. She will be speaking to us about blockchain and how the WTO rulebook can support small and medium-sized enterprises. So, Kikonde, let me start with you and with Twiga Foods. Over a quarter of Kenya's GDP comes from agriculture. And over 75% of the Kenyan population makes its living, at least in part, through agriculture. Agriculture is therefore a hugely important sector for your country. In 2014, Twiga Foods thought up an ingenious way of matching up food supply with food demand through an online platform. Explain to us what problem you were trying to solve when you created this platform and how you think Twiga has contributed to the solution. Over to you.
Thank you, Doa, and thanks for hosting us. It's an honor to be here. So just touching on the problem that you have mentioned with regards to food in Kenya, one of the contentions that we have as Twiga is that we don't necessarily have a food insecure country. We have a country that has extremely difficult value chains that have a lot of information missing. And so actually we are information insecure. And the lack of information drives a lot of the problems with our value chain. So if you think about it from a statistical standpoint, 96% of fresh produce traded in Nairobi, for example, is done through disaggregated informal traders. 70% of consumer processed goods is done through informal traders. So if you're thinking about your big box retailer, your big supermarket or your mini mart or chain of mini marts, they only account for about 4% of all the food that is traded in terms of fresh, and about 30% of all the food that is traded when you're talking about your flour, your sugar, your cooking oil, and so forth. That creates that problem will, if you go across sub-Saharan Africa, that problem will replicate, and I'm sure the other founders on this call will also confirm. And so the problem is that you have an extremely disaggregated informal trading environment, which makes it very, very difficult for suppliers, and by suppliers I mean farmers, I mean consumer processed goods manufacturers, to actually leverage on the information they have about demand and therefore invest the necessary capacity to supply towards that demand. One piece of data that I could share here is, even though agriculture is 25% of GDP in Kenya and almost 80% of employment, it only attracts about no more than 3% of all credit, for example, in this market. It is an extremely deprived part of the market. And so the problem here is without information, without proper value chains that are reliable, suppliers cannot make decisions about how to produce. Now, what that means is you have an extraordinary amount of food inflation in terms of price. A lot of that is driven by a lot of steps in the value chain. When you talk about perishables, food typically touches 6 hands before it arrives at a consumer in Kenya, which means that, for example, a banana that typically costs about 9 shillings to produce, before it gets to retail is about 50 shillings. That's about half a dollar in price, which is comparable pricing to what you'd find in London. And bananas that are being traded in London are coming all the way from Ecuador, Guatemala. Bananas coming into Nairobi are coming from 250 kilometers away from towns like Meru or Taita Taveta at the coast. So the lack of information is a significant contributor to the problem. So how has Twiga addressed this? Twiga has put a mobile commerce platform in the hands of traders. There are about 150,000 traders in Nairobi alone. And what Twiga does is it gives its traders an opportunity to place orders for their items, be it fresh or consumer processed goods, and allows the traders to become the generators of larger purchase orders. This allows manufacturers to have visibility on what demand looks like, how retail demand trends trend over time. It allows farmers to then grow their land holding. Despite bananas, for example, being 27% of all fresh traded in Kenya, there's very few farms above 3 acres, which means that farmers were unable to leverage on demand to improve their agricultural practices. So by linking demand and supply in this manner, it makes it possible for manufacturers to make investments that are prudent and therefore avoid overcapacity, which is a key component of price, and at the same time allows farmers to then make considered investments in their land holdings. So that is the role Twiga is playing, and the m-commerce platform is central towards us doing that. In addition to that, of course, we also run the supply chain ourselves. We do the distribution. We have a hub and spoke model. We collect from collection centers across the country, and we deliver all these products to outlets on a daily basis. Thank you.
Wow, this is certainly breathtaking. So really what you were trying to address is the lack of information. And it's fascinating, the platform you were trying to, the platform that you've created. Kamal, let me turn to you and to Troto Tractor. Ghana has a majority of smallholder farmers, many of whom can't afford to buy a tractor, but for whom a couple of days of plowing can make a huge difference to their agricultural productivity. Troto Tractor connects farmers to tractor operators and is often described as an Uber for tractors. Explain to us what problem you were trying to solve and whether you think you've succeeded.
Thank you very much, Dua, and fellow participant, thank you. It's a good platform. Actually, Troto Tractor, like you explained, is an on-demand service for farm machinery, from tractors to combine harvesters and all the services that are in between during the crop care. So if you take Ghana, for example, which is similar to other markets, most of our farmers are below 3 acres, like Ikondo mentioned. They have about 3 acres. And so buying a tractor is not something that they would even think of. And then you have also the mini commercial farmers who have about 100 acres who go into buying tractors for their farm. And then they would use the tractors and other farm machinery for only, say, 30% of the time. So 70% downtime and idle time is in there. So we saw that to start with, we can connect the idle time of the commercial farmers, tractors, and machinery to smallholder farmers, and make two things possible. That is, for commercial farmers, they can then make money from the idleness of their tractor when they finish their job. And for smallholder farmers, they have access to mechanization through that. But then we also realize that the majority of these farmers do not have even internet, and they live in rural communities, and they don't have access to smartphones. So what can we do? Then we introduce this, the low-key technology, SMS-based USSD application, and mobile money to give these farmers access to mechanization services. So we started connecting the tractors that were available, but not being utilized optimally, to farmers who need them. And then now it's moving further to people getting to know that if I buy a tractor and just put it on a platform, it can make money. That is where the Uber for tractor services jumped in. Yeah.
Excellent. Thank you so much. It's very interesting. So what Twiga has done is to match food supply and demand through an online platform. And what Troto Tractors is doing is to match supply and demand for transportation through an online platform. Fascinating. So Bolaji, let me now come to you. Cellulant Corporation. I've been thinking about how best to describe Cellulant to our viewers, and the words that came to mind are technology for transformation. Cellulant has revolutionized the way in which different actors across the entire agricultural value chain are able to access markets and financing through a transparent, smart contracting platform. Explain to us what problem you were trying to solve and whether you think you've solved it.
Thank you very much, Dua. Our business is actually a very simple business. And this is the way I would like those listening to us to think about it. Behind our business is our core platform. That's the fintech platform that simply connects banks, all kinds of financial institutions, consumers together, so that people can pay each other faster, they can pay each other cheaper. But fintech by itself enough does not lead to transformation. That's how we also have a second platform, the one that we call our marketplace platform, Agrico, that simply does one thing. It just makes market work. And this can sound like big words, but it's not. We came into agriculture from a huge subsidy program for the Nigerian government, and were asked to solve a problem for the Nigerian smallholder farmer. And it was to make market for inputs, high quality seeds and fertilizers work on a technology stack. And so what we were using the technology for was to connect government payments, which was the subsidy, connect suppliers of fertilizer and seeds together, and then connect smallholder farmers and agro-dealers together on one platform. So we're simply making that market work with a huge program. You know, at the highest level of participation, 8 million farmers participated in 1 year. But in solving the problem of making input farmer markets work, we now created a new problem. Because if farmers produce, question is, what are they going to do with all that produce? It's if they can't sell it, they simply don't make money and they remain poor. So we found out that by solving the problem of import markets, we've created a new problem, the problem of produce markets. So the farmer has produce, he can't sell it. And if he can't sell it, he doesn't have money. And you know, people talk about financial inclusion. But our paradigm at Cellulant is that financial inclusion is linked to economic inclusion. if somebody doesn't have money and you are talking about financial inclusion, the only thing you're including is zero. But if the person has money, you are not including something. So we decided to repurpose the platform and the whole framework to now match farmers who have produced to food processors who need the produce, and then to match the food processors to retail channel partners who want to sell it. So we came up with a new business model that we call from farm to plate. And the critical partners in that model are the community aggregator in the village, the retail channel partner that is in open markets, and then in between is the food processor. And then we simply connect everybody together. So basically what we've done is to solve the problem of efficiency of markets and transparency. So today we are now able to fulfill a promise to somebody in the rural areas of everyday fair pricing, not everyday high pricing, everyday fair pricing. And the premise is, as long as you come to any of the partners on the Agrico network, you'll be able to sell whatever you have produced every single day. Somebody will be available to buy it. And the logistics partner will be available to lift it. And a processor will be available to process it. So basically, we are just making the market work for everybody. And this has been very successful for us over the past 30 months of flipping the model from making input market work to making produce market work. And at the same time now, banks are coming to lend into the ecosystem, and development partners are coming on board to lower the cost of lending for smallholder farmers. So pretty much that's what we use both platforms for. So that's why we call ourselves a technology for transformation company, because we've combined fintech plus agritech to create a new kind of company that we call T4T, technology for transformation. So that's all I'll say, Dua. Thanks.
Thank you very much. Wow, what an undertaking. It's truly extraordinary. So really, what you deal with are the logistics of the entire food supply chain. So you've put the entire food supply chain onto an online platform, as you called it, from farm to plate. We're now on your online platform, trying to do business with the banks now coming into the picture and beginning to bring in finance through the platform. It's just extraordinary. Thank you. Onyeka, let me now come to you, Farm Crowdy. Farm Crowdy is Nigeria's first agri-tech company, and it describes itself as a new way to farm. It connects millions of small-scale farmers who have little to no access to finance to investors, enabling the farmers to access funding they might otherwise never obtain. It also enables them to locate the right place to sell their produce. In so doing, it revolutionizes not only farming, but also finance. So explain to us what problem you were trying to solve and whether you think you've made a contribution.
Okay, thanks for having me. So in 2016, I was like any other individual that wasn't involved in the agri-tech space. I was looking at how to participate in that space. And at that time, in conducting my research, I found that over 30 million farmers in Nigeria were struggling to profile themselves the right way to solve major problems that they were dealing with from generations to generation. So you find farmers that were struggling with access to funding, funding for inputs, and funding for the entire agriculture process they had to go through per season. You found farmers that if they solved the first problem, it was how do they get the right expertise to increase the yield from their farm in order to get the right margins when they go take them to market. And then the third thing was when they solved those first two problems, it was where do I sell my produce? So very similar to what Bolaji was saying that Sutherland has experienced with the farmers. Where do I sell my farm produce in order to get a decent margin from farming as a business? So I took things from a B2C angle where, coming from a background where I had to do a lot with B2C market, I took things from that angle to say you had millions of farmers on one hand that needed access to funding and needed to take care of expertise, that needed to get market access, And then you had thousands and thousands of Nigerians that wanted to invest in these people, but didn't know how to go around that cycle. So that gave birth to FarmCrowdy, a platform that we created to connect the investor we call sponsors with the farmers we built in our network, so that they are able to get access to the right kind of funding, the right kind of expertise, the right kind of market to sell their farm produce. So FarmCrowdy came into existence and provided farmers with solutions across the different problems I highlighted. So when it comes to input and financing, we had FarmCrowdy Finance that is dedicated to raising money for farmers using our crowdfunding platform, which we originally started from, and then extending it into other forms of funding that farmers can access within our network. And within the last 3 years, we've been able to raise just over close to $20 million in funding for these farmers through our platform. Then you come to FarmCrowdy Insurance, and in that place, we had to create, I mean, it's not just for you to give the farmers the input, you had to provide some kind of cover for your investment. And we discovered that a lot of farmers did not know about insurance. They didn't know about yield insurance, they didn't know about input insurance, and we had to train the farmers within our network to understand the importance of insurance, and also to benefit from what insurance was going to give to them. So we created FarmCrowdy Insurance to provide extend insurance service to farmers. And then when you come to the market access bit, from a B2B side, we created our FarmCrowdy aggregation solution that then allows the farmers to now sell their farm produce and earn a decent margin in a transparent way. So the farmer sees the price, he knows exactly, I mean, as you're negotiating with the buyer, the farmer is exposed to the negotiation, so he understands that he's being cut a fair deal. And then we're also able to use over 100 aggregation points that we set across the country to get the farmers to use them to get access to the inputs and make available their harvest within a 2-kilometer distance when they are done with their production, so that the farmer doesn't have to travel far in order to get his farm produce to market. He brings it to those aggregation points, and we're able to sort it out for them and then get it up the value chain to the wholesalers or the processors. We also created, in addition to that, from the technical expertise bit, we created what we call FarmCrowdy Knowledge to provide the farmers with technical expertise with partners that we were able to go into a deal with, so that the farmers now get the right, I mean, even as simple as getting the right fertilizer to put in the ground to grow your yield from 2 to 4, or just spacing your farm where you're putting seed in the ground and doing proper spacing between where you put one seed to where you put the next seed, or even finding the right tractor partners to work with. All of this came into the context of technical expertise that we're able to provide with FarmCrowdy Knowledge. And today, we currently have a network of over 100,000 farmers within our pool that we're now providing these added services to. And what we have noticed has been, as a farmer gets rewarded for participating in our network with the services we render to them, it brings 20 other farmers. And this has seen the growth we have seen within FarmCrowdy till date. On the flip side, we've had over 50,000 people that have downloaded our mobile app that are excited about investing in the farmers, that are excited about understanding exactly what happens in the agriculture space, that want to know how the food on their table got to their table from the farm. And these people are enthusiastic about the work we're doing, and then keeping abreast of the updates we give to them about the work we do on the farm. So this in itself became FarmCrowdy and how FarmCrowdy came into existence. And the bunch of 50 of us are excited about how we continue to drive the narration of applying technology underneath all of these things, the technology and the data that we're able to access from the network of farmers and the network of food operators within the value chain, for people to now understand how food gets to their table, but in addition, continue to boost the economy through our efforts.
Thank you very much for that, Onyeka. And I'd like to share with you that I downloaded your app before this program.
Oh, fantastic.
I have to confess that my first reaction was, this must be so empowering for the smallholder farmer to have that kind of information and transparency. So congratulations.
Thank you.
My pleasure. Now, let me come to the WTO speakers. Gabrielle and Emmanuel, you've now heard about these breathtaking transformations right from the horse's mouth, and not just from me. So, Gabrielle, I'll start with you. Can the WTO rulebook keep up with these disruptors? You've now heard about these 4 African experiences that are just extraordinary. Tell us how the WTO rulebook supports innovation. It's a very vast rulebook. It has a corner on services, a corner on intellectual property, a corner on regulations. How can the WTO support innovation in your view?
Thank you, Doa. And thank you for having me here. It's quite impressive for me to see real, as one speaker said, real business people that makes deal, and all the amount of connections that have been discussed thanks to digital trade. And this is what WTO is all about in a way. It's not a forum for business people, but it's a forum where governments sit together and discuss how to make sure that these amazing business deals and innovations can start and continue. And we say, and I think the business people who spoke before me will confirm, that trade is really an engine, a vector for innovation. And the ability to trade freely really augments the diversity, improve reliability, and allow for these connections. So this is what WTO offers. That is basic rules that exist for many years after the Second World War, way before e-commerce. But these rules are still favoring innovation, including in e-commerce, and allow me to maybe refer to 3 periods. So the basic old rules that are 70 years old, such as non-discrimination, transparency, reciprocity, the prohibition on governments to put restrictions that have no justification. All these principles are extremely relevant for the outstanding disruptor that we've heard, to allow them to make the creations that they have invented. So the WTO basic principles favor that. But electronic commerce as such has gained recognition in the WTO in '98, when there was a decision, a declaration on global electronic commerce adopted. And the key objective of that decision was to encourage governments to really appreciate the relevance of existing WTO agreements for e-commerce. Let me give you 2 or 3 simple examples. The WTO has an agreement on trade and services. And of course, I'm sure you've immediately understood that e-commerce is at the heart of trade and services. And in fact, digital trade and services is amongst the most dynamic sector for the global economy in the context of COVID recovery, but also, as it's been said today, in food trade. GATS, the Agreement on Services, talk about technological neutrality, which is an amazing fundamental principle where all means of electronic distributions are supposed to be treated equally, no favorism. We have an ITA agreement, an agreement on information technology, where a few, well, now a big group of governments have agreed to collect 0 tariff on information technology agreements, information technology products. And these products are governed by another agreement that is old, called the TBT agreement on restrictions, trying to limit restrictions to all this amazing trade that can take place. There's a TRIPS agreement on intellectual property that protects copyrights of digital products and inventions such as those we heard about today. There's trade facilitation agreement that facilitate the process of e-commerce transaction, et cetera, et cetera. So the existing agreements clearly help innovation generally and in digital trade, but there is more. Because there's more and more of this sort of transformation of physical goods into digital goods, some countries worry, in particular because we have a moratorium of 0 tariff on digital goods. So in 2015, some countries started saying we need new rules, more precise rules. And in 2017, 71 countries of the WTO agreed to what is called a joint ministerial initiative on e-commerce. At the moment, there's 84 countries who signed this statement saying, yes, the WTO basic rules are good, they help, but there are more specific provisions that are needed that we need to discuss. And this is what started 2-3 years ago. And it's at the heart of the current negotiations, especially in this context of COVID, where recovery is a must on several fronts. Thank you, Doa.
Thank you very much, Gabrielle. I have to say that nobody explains WTO rules as clearly as you do. So thank you very much for those comments, for rendering very complex things simple. Emmanuel, I'd like to come to you. Underlying some of the innovations that we heard about today is a technology called blockchain. Now, you are an expert in blockchain. You have been talking to WTO officials about blockchain for many years now, and you've written a book on this technology and its connection to trade. Now, how might this technology, in your view, be supported through the WTO rulebook? And I ask you this knowing fully well that you cannot speak on behalf of WTO members, but what I am looking for is your own appreciation.
Thank you very much, Doa, and thank you very much for the invitation, for organizing this webinar, and for having invited such inspiring speakers today. Now, we heard from them about the power of platforms, and you asked me about blockchain. Blockchain is all about platforms. It's about connecting people. It's about allowing people to connect directly in real time without intermediary in a highly trusted environment. And it's a technology that, in my view, can indeed have a truly transformative impact on international trade and give rise to entirely new business models. And we heard some of them today, very, very interesting initiatives. But technology is only a tool. Without a regulatory and policy environment that gives assurances to businesses, the deployment of the technology cannot be done on a large scale. So we need more than just the technology. We need regulation. We need an enabling regulatory environment. And I truly believe that international organizations have a key role to play in that respect. Now, how can the WTO, in particular, you were asking me about the WTO rulebook. So how can the WTO help? I think we can act at three levels. First, rulemaking. Rulemaking, we know that WTO agreements are technology neutral, so the idea is not to develop specific rules for blockchain, but there are a number of provisions that would go a long way, if implemented, towards enabling this technology to have a transformative impact on international trade. I'm thinking, for example, of recognition of e-signatures and e-documents, acceptance of e-documents by traders and customs. There are some provisions in the Trade Facilitation Agreement, but we can go much further than that. There are discussions also in the context of the Joint Statement Initiative on e-commerce that Gabrielle mentioned. The reality is that right now, too few countries at this stage recognize e-signatures and e-documents. There are international model laws on that. There are UN certified model laws on e-signatures that go back to 2001, but only 30+ states have actually enacted it. Same thing, the UN certified model law on electronic transferable records that was adopted in the summer of 2017 has been enacted by only one member state. So I think if we could give a push to that and have provisions on this, that would be extremely useful. Likewise, provisions on data flows are needed to support the deployment of this technology. Blockchain is a digital technology, so data flows is at the center of it. Second, I think there's a big role to play in terms of monitoring and coordination to avoid regulatory fragmentation. At this stage, on these technologies, there is no coordination. So basically, each jurisdiction does it its own way regarding, for example, the classification or legal recognition of digital assets. And here, I think there's a need to have a dialogue at a multilateral level to ensure a minimum of coordination and avoid this regulatory fragmentation. And third, I would say awareness raising and education, because sound regulatory development requires informed negotiators. Now, blockchain or distributed ledger technology is a complex technology. It's very difficult to apprehend for many people. And it's also a very fast changing environment. So following developments very closely is crucial for regulators. And I think here the WTO has a role to play to support the development of an enabling regulatory framework.
Thank you very much, Emmanuel. The words that I retain from your intervention, I think the key words are that technology is only a tool, and that we need a regulatory framework for any technology to function properly. So thank you for that. I'd now like to come to our second round of questions. Now, I'd like to ask each of our 4 corporate executives, whom I have called the disruptors, about technology, generally speaking. As I mentioned in the beginning of this webinar, there is a perception out there that digitalization is a Western concept, that Africa has yet to digitalize. Now, as you've all demonstrated here, that couldn't be farther from the truth. So I would like your opinion on how your customer base is responding to technology, on whether you faced any resistance to your technological innovation, and your views on how we can boost digitalization in Africa. Kikonde, I will start with you, Twiga Foods. How receptive have farmers and vendors been to your online platform? And what about the digital have-nots? And how can we boost digitalization?
Thank you, Doa. So I think, first of all, it's just to understand what drives digitalization in the context of what we're doing. I think the biggest thing is always utility. For any person to take or adopt a technology, there must be a utility at the end of it that outweighs not using the technology. And what I've seen from working with farmers is the initial resistance to using the technology was always when we did not clearly outline what the benefits of using the technology are. When we began to engage with farmers and they began to see that, first of all, they would always have transparent transactions. They would not be dealing with intermediaries who did not account for the transaction clearly. Then they started to jump into the system. The second thing was, beyond just that, was the digitization of payments. So all our farmers, 100% of our farmers are paid using cashless means. And what is interesting is we've seen farmers, those who have begun to increase their output, have actually moved to getting paid via banks, which was not the norm. So now they can walk into their banks and actually be proud that they're getting paid through Twiga through their bank accounts. So the technology has enabled that transformation. So we've seen farmers start to embrace the idea of, I need to get a smartphone, and we've started to see an increase in that. At the same time, when you look at our vendors, we see the same resistance. Initially, a lot of vendors were resistant to the idea of using our m-commerce platform. The reasons, again, were utility. Why would I give you my ID number? What is the reason for that? They were suspicious. And that is, of course, historical. It's about legacy issues around being asked for your identity number. But over time, they began to see the value of it. It means that now I have a credit history. I can borrow and finance my working capital for my shop. It means that I don't have to go to loan sharks to get money to run my shop. I can go and have cheaper credit in order to run my shop. And so what we've seen, especially on the vendor side, is that now our vendors are 83% of our vendors actually have smartphones, which is an astonishing number if you consider that I think it was in 2012, mobile phone penetration, smartphone penetration in Nairobi was at around 25%. So now you have all these vendors who have smartphones and they're using them for that purpose. So I think it always comes down to what is the utility. And as a company, you have to focus on empathy, sit on the other side and ask yourself the question, if I was a vendor or if I was a customer, why would I use the technology? And it comes down to there has to be a utility. So I would say that that is the biggest thing. In terms of how we would encourage this, or what I think of as being an enabling factor or enabling factors towards improving digitalization, I'd say the biggest one is just, of course, encouraging companies like Twiga and FarmCrowdy and Cellulant and Trotro Tractors and all these other companies that are coming through to thrive in this environment. How do we improve? How does government policy enable these companies to thrive? That alone means that these companies will find utility for technology and people will use technology and digitize. You can't digitize by forcing people to use technology. Entrepreneurs have to come into the mix and figure out how digitization can result in utilities that are unforeseen or people do not anticipate. So I'd say that's the biggest one, is just encouraging the entrepreneurial culture. We've seen that has been encouraged a lot in Kenya. The government has largely stood aside and let companies focus on building mobile commerce, e-commerce businesses. That has driven digitization. I'd say the other one I've just observed looking at our client base is, something that we perhaps always ignore, which is literacy. So encouraging literacy, especially mature people literacy. We ignore the number of people who are advanced in age who cannot read and write. And we tend to focus our education a lot on young people. And that's not a bad thing, but we ignore the older generation. And I think that's something that we need to change and remove the stigma around being illiterate at an advanced age, and encourage older people to get literate. So I think that is another big thing that governments can also support. Thank you.
Thank you very much for that. Very, very interesting comments. Utility, and of course, you've had to overcome suspicion, which I can imagine plays a big role when it comes to these sorts of platforms. Bolaji, let me come to you, Cellulant. Now, you're working across the entire agricultural value chain. You're revolutionizing logistics throughout the entire chain. Now, are your customers sufficiently digitalized to be able to operate comfortably on your platform? And I've been reading on your website about programs that you have, like Neighborhood Agency Banking, which is a program that helps you reach the unbanked, so to speak. So tell us about uptake of your technology, resistance, and your thoughts too on boosting digitalization.
Thank you for that, Dua. For us as a company, and Kikundi has already mentioned about the importance of utility in digitization. We had a head start because the Nigerian government, to a large degree, financed the early stage of the digitization journey by simply telling farmers that I'm going to put money, or we are going to put money into your mobile wallet, and you have to spend the money digitally. That really, really helped, because somebody needed to finance that early adoption and early stage learning by this particular demographic group. When we decided to connect farmers to markets, the question was really, how will these farmers be paid? And our choices were really very limited. It's either you pay them cash, and the problem with cash. We decided that we're going to build on the subsidy program method of payment, which is really to pay them digitally. But unlike the subsidy program that everything was locked in tight into a closed ecosystem, this was an open ecosystem. The farmer had to be able to use their money anywhere, anytime they wanted. So that was what made us decide that we're going to create a new structure for financial inclusion in Nigeria. Because when you take a look at Nigeria, large country, really about 5,000 bank branches, almost about 40 million people banked. So you begin to see the numbers. More like one bank branch is serving roughly 20,000 people. And we said the next category of customer, the economics of branch banking, they are not going to work. But there's a new model that might work. And that was why we said we're going to create a new model called neighborhood banking, which is essentially, we're just going to create in rural areas this set of small entrepreneurs, give them all these small kiosks, and then they run this neighborhood banking point where they run mobile money services from those kiosks and literally to businesses. And that strategy has kind of worked very well for us because as we build out our marketplace, we're building out this financial inclusion network at the same time. So when you sell your produce or whatever through the platform, you get paid and you pay for it through the platform. And if you need cash, you go to the neighborhood banker to take out cash. And because we've built out this infrastructure now, we've done all the nice things that other speakers have spoken about regarding building a credit history and all those things. So it's been a journey that has been interesting. Our paradigm has been that what people call the unbanked, we refer to them in our own language as the economically active but financially excluded. And we believe that by building out this network of neighborhood bankers to this category of people, by bringing out a framework that allows them to become economically included, you just marry inclusion with economic activity, and then you just have better household income. So that's how we think about it. Most of our neighborhood bankers are in the north of Nigeria, where you have majority of the unbanked but economically active population in Nigeria. And that has worked quite well for us. And that's what I would just say for now. Thank you.
Thank you. Thank you very much for that. Your comments make me think about how digitalization can be achieved through a gradual approach. So you've tried to address the sort of the lack of digital literacy through the neighborhood kiosks, etc., that you've created, which is amazing. And as you said, the slow and gradual buildup of a credit history for your clients. So I think there are lessons to be drawn from that more broadly for the African continent. Thank you. Kamal, I'd like to come to you, Troto Tractor. So through your platform, a farmer can request, schedule, and prepay for tractor services online. Are many farmers able to accompany you in this digital journey? And what resistance have you faced? In particular, I'm thinking of potential displacement of traditional tractor service providers. Has there been any sort of resistance on their side to seeing you come into the market? And finally, your recommendations for digitalization. Kamal, are you still with us? I know we had problems with your internet connection earlier. I think we may have lost Kamal Yacoub. He may try to reconnect at a later point. So Onyeka, let me come to you then, and Farm Crowdy, matching small-scale farmers with the right investors. It's clearly transformative for the future of farming. But are small-scale farmers or even small investors amenable to using your technology? Has there been resistance?
So let me speak about the investors first. Sponsors have come on our platform through our mobile app. So they go on the Farm Crowdy platform, they download the app, they get to see different farm types that they want to participate in, and they go ahead and sponsor that. This has even led us to creating our own crowdfunding platform that's now separate from Farm Crowdy, that's doing many more across the United Nations SDG goals beyond just agriculture. So the acceptance of that technology from a sponsor's perspective A sponsor that's able to put $100 to $200 on our platform has been very receptive. These are people that are classified as middle-class Nigerians, and so they have mobile phones. They're using their mobile phones for everyday banking, and so if they're using it also to invest in agriculture, it is widely accepted in Nigeria. And there are a lot of people that have, there are more mobile phones in Nigeria than individuals, because you find people with 2-3 mobile devices. And so you see a lot of them use that. So the acceptance from that angle has been quite impressive. And the acceptance also from using their mobile phones to invest in agriculture has also been quite impressive. So that's one bit. And then on the other side, on the farmers' bit, the way we have applied ourselves to using technology for the farmers hasn't been entirely dwelt on the farmers having mobile devices. Our technology applies itself from a place of providing solutions like technical field expertise to agronomists on the farm, who then extend this to the farmers. So the farmer may have a mobile device that may just be able to get text messages and make phone calls. The best you can do for them is with USSD codes. But assuming they don't even have that, at least the agronomist should be able to have a mobile device that he can get the data from us that he uses to then make the farmers a lot more knowledgeable. And so the farmers on our network, one is that we capture their data, so we get into the field, we capture their data, biometrics data, operational historical data, financial data, and we have all of that on our pool. Then we have also, we pair them up, we're creating at the moment what we call farm crowding villages, where an agronomist now owns a village of maybe 50 farmers, and then with 50 farmers, he's able to extend his hand to them. It can go from 10 to 50, but not more than 50, and he extends his hand to them within a particular community. And so where those farmers don't have their mobile device, they can work with that agronomist to get the knowledge they need. And then also where the farmer wants to sell his farm produce, he can move between 1 and 2 kilometers from his farm to the nearest aggregation point and then sell this farm produce through them. We have it captured, and then the buyers are able to then access that farm produce. So, but this has been for us how we've extended ourselves to the farmers. But we're looking at the future where, similar to what Cellnet has done with a wallet system. If you tell a farmer that he will get money through a mobile device, he will get the mobile device. If you tell a farmer that if he's able to understand the mobile device and it will help him improve his business, he will understand what you want him to understand on that mobile device. Transactional benefits to any individual, including farmers in this case, will make people do things that you'd be surprised about them doing if there was no benefit to them. And so this in itself speaks to how the adaptation of technology can now take its place in the African context, where you find financial benefits for individuals, even if it's on the lower end, you find financial benefits for them, for the farmers, and then people will now start embracing new technologies that you have for them. As long as, from the farmer's perspective, who is a businessman, he is able to see increase in profit, increase in margins, he will do what you want him to do when it comes to the application of technology.
Thank you very much for those comments, Onyeka. Clearly, you're right. I think the way to boost digitalization is to make digitalization profitable for the user. As you said, people will find a smartphone if money is going to come to them through that smartphone. So I think in terms of policy making, that's obviously key. And something that policymakers have to keep in mind, incentives, basically. Kamal, you're back online with us, as far as I can see. So let me repeat the question that I had put to you earlier. I am wondering whether you have faced any resistance to your technology. And I'm wondering in particular if traditional tractor providers have felt displaced by what you were able to do. And then just your recommendations on digitalization.
Right. Thank you very much, Dua. So if you look at the journey, the first year was very, very difficult for us to get farmers on board. But it was also a very good time for us to learn what works on the ground. So ideally, if you give farmers just the service without any other add-on service, they can get that from any other space. So the fact that you are bringing in technology for them to have access to mechanization alone doesn't really bring farmers on board. So we quickly learned that and added other things that farmers normally would like. So for example, if you do the plowing, they want to be assured that they can do the harrowing with you. They can do the fertilization with you. They can do the planting with you. They can get access to combined harvesters when they are harvesting with you. And in that, it's easier to convince them. So we just added all these services onto our platform, and it became a one-stop shop for all of them. And this actually increased the demand for mechanization services, that we have to actually now plan on how to bring supply to demand. That was the case of Ghana. The other things that we also realized was women and young farmers do not want to see the drudgery in farming. And so in most of the communities in Ghana, our initial customers when the rain starts are women, because they then understand that within few hours, they can have their land plowed and harrowed and planted. Instead of spending a whole month tilling a land, they can get tractors to do that in few days. And so we understood that drudgery is one of the reasons why women and even older generation of farming are now using the services. Yeah, so now we've just created a slogan and said, look, these farmers and tractor, we are sending the cutlass and the handheld hoe to the museum. So that is the new stuff. So it's been very good with the farmers. For the tractor owners or the current mechanization service providers, we actually work with them. So we want them to be our partners. And that is how we are creating our platform to look like. So it's a platform that enables mechanization service providers to deliver their services digitally. And so now they are our partners, because immediately you start making them feel like they are competitors, then you are out of business. And for us as a first mover advantage in most of the countries we are in, Ghana, Zimbabwe, and currently Togo, and hopefully this year we come to Nigeria, Onyeka and Cellulant. Yeah, so we realize that working with them is even much easier. Working with the mechanization service providers is much easier than onboarding one mechanization service provider at a time. If you look at my recommendation in boosting digital technology uptake, I would suggest that it should happen like the way other industries happen. So for example, if you look at our city rivals like Uber, Lyft, and the rest, you can see that the infrastructure supports their existence. And so it's easier for you to get access to loan, to buy a car and put it on Uber, because Uber's platform would generate income immediately. It's easier to find spare parts for your cars when they develop faults. It's easier to find good roads for your cars in the cities. From policy level, to say that the infrastructure for people, mechanization service providers to have tractors on the platform to increase the supply of equipment on the platform is much easier. That would be one step of increasing supply of mechanization service providers. And then the rest would dwell on digital services. So for tractor owners and for farmers, once they see that the initial service that they get from our platform can unlock other potentials like insurance, can unlock other potential like credit for inputs, can unlock other potentials because their history on our platform can then generate all these interest from other operators. I think that would be my contribution on boosting technology adoption.
Thank you very much. Thank you very much. This was really fascinating. And of course, what stayed with me from your comments is that you are sending some older ways of doing business to a museum or to the museum. And indeed, it feels like a lot of the practices we were using before now belong to a museum. I'm sure many viewers are simply breathtaken by what the four of you have shared. So let me now come to our WTO speakers again. Gabrielle, you've now heard these different comments and these different interventions. You gave us a very nice overview in the beginning of how the WTO rulebook supports innovation. Can you zoom in on e-commerce in particular and tell us what is happening in the WTO on that front?
Thank you, Doa. You're right, that is amazing to listen to real business people. And again, I'm repeating myself, and it supports what Emmanuel said earlier. The WTO is a forum where governments sit and talk about the problems they have. And often it's the problem that their own business have in trying to export their service or doing what the amazing businessmen we heard are trying to do. Now, in e-commerce, I mentioned the work started in sort of 2000. They started looking at the existing agreements, but towards 2015, many said we need more specific negotiation, and this led to the so-called GSI, Joint Initiative. What is it exactly? It is essentially a subgroup of members who decided that there's a need to deal with specific problems relating to digital. But there was resistance, not only from Africa, but a good deal of African countries resisted. So there could not be a full multilateral negotiation on digital trade or e-commerce, but it's a subgroup that started and hoping that everybody will join in. There are African countries that are part of the GSI on e-commerce. What are they talking about? Well, they're talking about a long list of issues that have been mentioned, such as electronic transaction, digital signature, telecom, but they're talking about problems. And let me just give example of 3 difficult issues that we are all aware of. Cross-border data flow. Data, and we've heard it today, is really the driving force in digital area. But of course, some governments put restrictions, abusive restrictions on data movement. Asia has a lot of regulations, then come Europe, America. Africa is the continent with the fewest restrictions, but then its business people may be victim of restrictions put either by individual countries in Africa or elsewhere if they are to expand. This is not to say that restrictions cannot be put, but they need to be justified. So this is an issue that is discussed. Privacy. We know the Europeans are very keen on privacy, but what does it mean? And often the desire for privacy hides protectionist actions, or the requirement of equivalence is good, but sometimes not justified. Another problem is, of course, what we hear, data localization, or the regulation of cross-border data flow through a data localization, where a government will require that the data are based in its country. Is it necessary? Who does it? So these are examples of issues that are discussed at the moment. They're discussed amongst, as I said, a group of about 80 countries out of 163. Now, you should know that the Ottawa Group, so what's the Ottawa Group? It's this group of middle-sized countries: Australia, Brazil, Canada, Chile, EU, Japan, Kenya, Korea, Mexico, New Zealand, Norway, Singapore, Switzerland, have issued a statement last week saying that dealing with e-commerce GSI is the priority for COVID, and in fact for the future. Now, why Africa in particular? Well, it's because Africa is booming, and Africa is also very wise. The recent regional trade agreement, the continental free trade agreement in Africa, has this very special chapter just on e-commerce. It's brand new. Japan, US signed one, Singapore, Chile, New Zealand a few weeks ago, but Africa seems to take the lead. The African governments, although some resisted, some are taking initiative to push and integrate e-commerce, and also trying to limit abuse in regulations by other governments, which is the goal of the WTO. That's why we say WTO is a forum of governance. This is where business go to complain to their own government, and then the government come at the table and talk to the other countries that are arguably not respecting the basic old rules, but as applied in a more specific manner in e-commerce nowadays. Thank you.
Thank you very much, Gabrielle. Very interesting that governments now, a number of governments now want to make e-commerce negotiations in the WTO a priority. Further confirmation that COVID has really taken us into a new era. And I hope all of that works out. And equally interesting are your comments on how African governments are at the forefront, in fact, of wanting e-commerce. So fascinating. And as an African myself, I'm Egyptian, I can only be proud. Emmanuel, I'd like to come to you. Small and medium-sized enterprises, you're an expert on how the WTO rulebook can support these enterprises. All of the companies that we have on this webinar started small, started with an idea, and then they grew into the incredible accomplishments that we've heard about now. How can the WTO rulebook support small and medium-sized enterprises, and what is the ongoing conversation in WTO?
Yes, thank you. And I must say it was very, very encouraging to hear the experiences of Kamal, Onyeka, Kikonde, and Balaji, and see that it's possible for small businesses to grow and to be successful. Now, the reality is that many small businesses actually struggle. They struggle to grow domestically, but also internationally. And even though MSMEs represent the vast majority of companies worldwide, on average, they represent more than 95% of companies, account for 60% of employment, their participation in international trade remains very limited. And so this is what prompted a group of WTO members back in 2017 to launch another joint statement initiative. There are several joint statement initiatives at the WTO. And so in December 2017, they decided to launch a joint statement initiative on MSMEs, an informal working group on MSMEs. This group now has 91 members, a few Africans, very few though, but these 91 members represent about 80% of world trade. And what prompted these members to launch this initiative was the need that they perceived to help MSMEs, to help them grow, to help them trade. There were some discussions at the WTO at the time, but very scattered in different committees. And so they wanted to better coordinate action and try to better address the challenges that MSMEs are facing. Now, what are these challenges? We heard some of them: limited resources, limited access to information, limited access to finance, including trade finance, burdensome customs procedures. So the group is now working on a set of recommendations, guidelines to first improve access to information. So we're working very closely, the WTO, with the ITC and UNCTAD in the context of the Global Trade Help Desk, which is a platform that is meant to provide trade-related information to small businesses wishing to import and export. So if they want to export cocoa beans, for example, they can log in and they'll have all the information that they need in terms of tariffs, in terms of the different documents that they need to present, the different rules that apply. So the group is actively supporting the development of this platform and the operationalization of this platform. There are also recommendations to encourage members to be more transparent, to provide more information, for example, in the context of the trade policy review mechanism that we have at the WTO, so that members are in a better position then to assess the situation, to exchange good practices, and then ideas about how best to support small businesses. There's also a recommendation on involving and consulting small businesses when trade legislation is being developed to make sure that their views and needs are being heard. And another one that encourages the full and rapid implementation of the trade facilitation agreement to try and address the issue of burdensome import and export procedures. And the group is also looking into a number of other areas to try and improve access to finance, including trade finance, to facilitate cross-border payments. And we heard about the question of digital payments that was very interesting earlier in this webinar, or to support efforts towards digitalization. The current crisis has shown that going digital is a necessity. So it was very interesting to hear from our speakers today how we can boost digitalization. And I would actually invite you, if you have any suggestions, to share them with us, with the group, to get in touch, because what we really want to do is hear the views of MSMEs to try and do at the WTO what is needed to help MSMEs trade. So exchange good practices and look into what needs to be done, and then try to push at the policy level some recommendations and guidelines for governments to take action.
Thank you very much, Emmanuel. Very useful to know that all sorts of platforms are being developed to give SMEs greater access to information. Information is so key here. We now come to the segment where we take questions from viewers. At the same time, we're running out of time. So I will focus on the two questions that have come, I don't know how many times, from different corners of Africa in particular. I have at least 15 questions from people in different countries in Africa saying, when will these tech entrepreneurs come to my country? So I suggest that you all in turn respond to the question of whether you are going Pan-African. Have you moved beyond the border of the country that you started in? And the second question that I will put to you, which has also come in from numerous young viewers of this program who are saying, how can young tech entrepreneurs in Africa be supported? Are there fora where young tech entrepreneurs can meet and exchange ideas? So commenting on these two questions, I'll give the floor to each one of you for no more than 2 minutes, please. Let me start with Kikonde.
Thanks, Doa. So in terms of when we are going to other countries, I think we had already intended to go to West Africa. We had a lot of interest to go there. So Onyeka, Boloji, and Kamal, we will be on the other side of Africa once COVID-19 settles down. So look forward to going to the other side and seeing what's going on that end, and collaborating and having fun with the other members of the team. So we can't really give firm dates, but you know, it is in the plans. In terms of how can entrepreneurs link up with each other, and are there forums? Yes, they are. Many of them I think are deeply local, but I know a few that are a little bit more broader. I think there's one hosted by Google, which is quite popular, the Launchpad Accelerator program. I'm sure members of the panel as well are familiar with it, and there's quite a number of others. I do concede that we could do better. as entrepreneurs on the continent. But I think everyone is so fixated right now on building their business. I think it'll take some time before I can get Onyeka for an hour to chat on a regular basis, or Baloji or Kamal. So I think it is going to take some time. But yes, I think it is something that on the back of our minds, we know is important. And we will be thinking through that. And I think I'll reach out to members of the panel and we can take these conversations going forward. And we can keep chatting. But thank you very much for hosting us. Thank you.
Thank you, Kikonde. Kamal, over to you. Are you taking your tractors global? You're on mute. I don't know if
expansion.
Kamal,
with Zimbabwe to understand. Hello?
we can hear you. Start over.
Yes. So we've actually started our expansion process, and we are currently operational in Zimbabwe. We chose Zimbabwe to understand the Southern African market. So, and it's successful. So Zimbabwe is good, which means the Southern African countries should now be expecting us. We did a pilot some time back in Kenya. It didn't go very well, so we would get back to that. And we have launched in Togo recently. Actually, in this COVID-19, we were able to launch our services in Togo. Yeah, and then Benin is next. Yeah, and then after COVID-19, we would look at how we can replicate our services in other countries.
Dwyer, you're muted.
Sorry, thank you very much for that. A lot of our viewers are certainly expecting you on the other side of the continent soon. Bolaji, let me come to you. What about you, your plans for expansion and tech fora that you're aware of, Pan-African tech fora to support young entrepreneurs?
I mean, for us, we're already working in 18 countries across the continent where we have presence. And this year alone, we added 6 more countries, Egypt, Morocco, and a number of others to it. I mean, for young entrepreneurs who are looking for support, I mean, there are so many forums organized by so many people. So I think Africa is a much better place now. But I think the real question the young entrepreneur wants to ask is really, if I'm looking for funding to kick off my ideas, what's the market like? And what I'll say is that the venture capital scene for early stage capital in Africa is much, much interesting now. So many funds are on the continent now, like Eco VC, TPG Capital, so many are on the continent now. So it's to be an entrepreneur in tech in Africa now, it's a good time. That's what I would say, because we are almost running out of time.
Excellent. Onyeka, what about you?
So we're currently in Nigeria. We're looking at expanding into other African countries. We have our eyes set for the West African market, and then we also have our eyes set for one country in North Africa, one country in East Africa. We also have our eyes set on a country outside of Africa, outside of the continent, in another market altogether. Now, the important thing is that in scaling or looking at how you expand your business, you want to make sure what you're expanding is sustainable, not just for the sake of expansion. And so we're looking for the right business partners, the right stakeholders, the right entrepreneurs to work in these countries so that we can find how we can build sustainable solutions to expand to those countries. And we're not just in a hurry to move into them. But I mean, this year, so 2021 is what we've tagged our global expansion year. All that work will start within the next 6 months. Having said that, we currently are exporting some of our farm produce to the UAE, to the Middle East. And so we've been exporting, so we grow ginger in Nigeria, we're exporting it to Dubai, We grew foodstuff in the country. We're exporting it to Ghana. This has already started. So even if we don't have presence in those countries are already getting some of the export from our farms in those countries. Now, speaking about entrepreneurs and where they can connect, I think Kondo rightly said that, when we're talking on this call, prior to the call starting, I was saying to Bolaji that the last time I had a conversation with him was on another panel a couple of months ago. Same thing, the last time I had conversations with the team in Twiga, or one of the co-founders was in a different panel. And we found that it's in those panels we then have the chance to connect and then ask questions and then rub minds and maybe emails exchange and one or two things happen. It's not really easy for a business that has so much on its neck to start looking at how to connect. But I'm all up for any forum. I've known there was a forum that Nigerian entrepreneurs were trying to have where they just come together and they just talk about their issues. One of the chairperson for that forum traveled out of the country and that didn't hold again. So I don't really know many of them. The only places I see people I connect is maybe on panels or I go for an event and we're able to rub minds together. So I'm open for it. If anyone discovers one, I'm open for it. I'm open to share my ideas. I'm open to allow people to learn from my mistakes so that they can build maybe better businesses in the future.
Look, thank you very much for these comments. We have come to the end of our webinar. Clearly, you are not only moving within Africa, so your goal is not just to be Pan-African businesses. Some of you have already gone beyond the borders of the continent and have become international or are becoming international. And I think this is where the African Continental Free Trade Agreement that just got signed and which is going to enter into force is amazing. And we can only hope that it boosts digitalization and gives momentum to the work that all of you have done. In fact, in one of our previous webinars in these food dialogues, we focused and we zoomed in on the African Continental Free Trade Agreement. It is a momentous achievement by Africa, and its conclusion was declared Africa Day. And I really think it is Africa's Day. Congratulations to all of you. And I really hope that this webinar is just the beginning of the WTO's relationship with you. So we will certainly build a network. And I would like to also, just before closing, not only thank you profusely, but thank Emmanuel and Gabrielle for their clarity of thought and for all the ideas that they have brought into this discussion. So stay in touch, everybody, and stay safe.
Thank you very much. Have a great day. Bye. Onyeka Kikonde.
Bye.
Thank you. Thank you. Have a good one.
I want to restart my